All right, let's get right into it. AppLovin just released their full year numbers for 2025. And folks, the story here is, well, it's pretty incredible. We're talking explosive growth, sure, but what's really turning heads is the massive profitability. So let's dig into the data and see exactly what's fueling this amazing run. Okay, before we get started, just a quick but super important disclaimer. This analysis is purely for educational purposes, all right? It is absolutely not financial advice. All the figures and data points we're about to go through are pulled straight from AppLovin's official public filings. So here's how we're going to break this down. We'll kick things off with the landmark performance, then look at the revenue surge that made it happen. After that, we'll hit the main event, breakthrough profitability. Then we'll see how that translates to cash flow and shareholder value, check out what management is forecasting, and wrap up with a little context on the numbers. Let's jump in. All right, section 1, a landmark performance. We're not just throwing that phrase around. 2025 was way more than just a good year for AppLovin. It was genuinely a record-shattering year that honestly has completely reset the bar for what we can expect from them financially. And boom, here it is. This is the number that tells the whole story in a nutshell. A plus 116% year-over-year jump in net income from continuing operations. Now let's be clear, this isn't revenue we're talking about. This is pure bottom-line profit. It more than doubled in just 1 year. This one figure is really the anchor for everything we're going to talk about today. We'll come back to it for sure, but I had to lead with it. It just perfectly sums up what a monster year 2025 was. So the big question is, how on earth do you pull off that kind of profitability? Well, it all has to start with the top line, right? So let's move on to our next section and look at that surging revenue growth. Okay, check this out. This chart really puts the scale of their growth into perspective. I mean, look at this. In 2024, they were pulling in about $3.2 billion. Fast forward just 1 year, and that number skyrockets to almost $5.5 billion. That is just a massive leap, and it shows you how much this business blew up in just 12 months. All right, let's get into the nitty-gritty behind that chart. For the full year, revenue clocked in at a massive $5.481 billion. That's a 70% increase. But here's what's really interesting to me, the momentum. This wasn't some front-loaded year with things tapered off. Nope. Q4 revenue was still up a whopping 66%. That tells you they hit the ground running in 2026 with some serious velocity. Look, a 70% jump in revenue is awesome, don't get me wrong, but like we said at the very beginning, that's not the real story here. The real game changer for AppLovin in 2025 was how incredibly well they converted all that new revenue into actual profit. This is where we see their operational efficiency just shine, turning those sales into cold, hard earnings. Hey, remember that crazy number we started this whole thing with? Well, here's what it looks like. This is net income from continuing operations. We're talking core profit here. It just exploded from under $1.6 billion in 2024 to over $3.4 billion in 2025. I mean, just look at the jump on that chart. It's even more dramatic than the revenue chart, and that's a huge clue. It screams significant margin expansion. And here are the hard numbers to back up that visual. The key takeaway, the absolute central point of this whole briefing is right here. $3.433 billion in profit for the year, a 116% increase. What this really means is that for every new dollar of revenue they brought in, a bigger and bigger piece of it made its way down to the bottom line compared to the year before. That is efficiency. Now, if we want to get an even cleaner look at how the core business is performing, a lot of analysts look at something called Adjusted EBITDA. Just think of it like this. It's a way of looking at profit that strips out some of the accounting stuff, things like taxes, interest payments, non-cash expenses. It's designed to help you zero in on the raw operational horsepower of the company. And guess what? When you look at AppLovin through that lens, the story gets even more impressive. Their Adjusted EBITDA shot up by 87%, from $2.4 billion to over $4.5 billion. This just hammers home the point. The company's core money-making engine was running on all cylinders in 2025. Okay, so this kind of profitability and operational muscle naturally leads us to the next logical question, right? Cash flow and shareholder value. I mean, a company making this much profit has to be a cash-generating machine. So let's find out just how much cash we're talking about and what they decided to do with it. And here you have it, nearly $4 billion in free cash flow. To put it simply, that's the pile of actual cash left over after they've paid for all the essentials to run and grow the business. It's an incredibly powerful sign of financial health, and it gives the company a ton of options. Now, to really get how big that number is, you need some context. So let's look back. In 2024, they generated just over $2 billion in free cash flow. A year later, in 2025, that figure basically doubled to almost $4 billion. That is a massive increase in the amount of cash they have on hand to do, well, whatever they want. Invest, buy other companies, or give it back to shareholders. So, what did they do with all that cash? Well, a huge chunk of it went right back into a capital return program. The company bought back 6.4 million of its own shares, costing them over $2.5 billion. Now, moves like this are usually seen as a huge vote of confidence from management about the company's future. It's a very direct way to give value back to their investors. So that's the story of 2025, an absolutely historic year. But the big question for any investor is, what's next? So let's pivot and look at the path ahead. We're going to check out management's own guidance for the first quarter of 2026. Okay, so this is the official guidance straight from the company. For Q1, they're forecasting revenue in the ballpark of $1.75 to $1.78 billion. But what really stands out is the Adjusted EBITDA guidance. They're projecting between $1.47 and $1.5 billion. If you do the math, that works out to a mind-blowing Adjusted EBITDA margin of 84%. That tells you they fully expect this incredible profitability to keep right on rolling. But, and this is super important, we have to pair that guidance with this direct quote from the company's own forward-looking statements. It says, "Our expectations and beliefs may not materialize." This is what's called safe harbor language. It's the company's way of reminding everyone that guidance is just their best guess right now. It's a projection, not a promise. It's subject to all sorts of risks. All right, to wrap things up, let's just quickly touch on our final section, disclosures and context. This is really about understanding the fine print behind all these big numbers we've been throwing around. So you heard me talk a lot about things like Adjusted EBITDA and free cash flow. These are what we call non-GAAP metrics. Companies use them because they believe it gives you a cleaner look at their core business performance, kind of cutting through some of the accounting clutter. The key things to remember, though, is that these are meant to be a supplement to the official numbers, never a replacement for them. And that really brings us to the big final question, doesn't it? After a year of just explosive growth, a 116% leap in profit, and generating almost $4 billion in free cash, the key question for 2026 is, what does AppLovin do with all that firepower? Do they double down on innovation? Do they go on a shopping spree for strategic acquisitions? Or do they get even more aggressive with returning cash to shareholders? That's the multi-billion-dollar question that this incredible year leaves us with.